the annuity waters, and I had the privilege of attending Dream Destination this year in April in the Dominican Republic, and I learned from the chairman, Mr. Phil Gerlicher, that since its founding, FFS has crossed the $500 million mark in cumulative annuity premium, and the goal set forth by the top boss is $1 billion in cumulative annuity premium in the coming years. We feel at American National that we have the tools that each and every one of you can use to help meet that goal in a short order of time. So, for those of you who are a little bit newer to the world of annuity, always find this wheel, if you will, kind of a good conversation starter, icebreaker, to give a high-level overview of the kinds of annuities that we offer at American National and how they might fit with your clients and their particular needs. So, starting counterclockwise, we have, starting clockwise rather, we have our single premium immediate annuity called SPIA, Palladium SPIA. That's ideal for clients who are a little bit older, so the more mature client in his or her 70s or 80s who's just looking for monthly installments of income by investing a lump sum of money into an annuity. And as the name implies, it's immediate in nature, so quite literally, they fund the annuity with a lump sum, and the next month they're getting monthly payments from American National that they can use to help defray monthly living expenses. Moving a little bit further on the wheel, we have our fixed annuity, which we call multi-year guarantee. And those annuities ideal for the types of clients we refer to as pre-retirees. So those in their 50s, 60s, they're getting ready for retirement. They haven't quite crossed that line just yet. And these clients tend to be more conservative in nature. So I'm sure those of you who are a little bit more experienced with the FFS and also a little bit more experienced in writing annuities know these kinds of clients. We affectionately refer to them as the CB clients, and they're the ones who are just oriented toward buying an interest rate. You know, they turn over a certain amount of money that they wish to invest to the insurance company, and they want to know they're getting a fixed rate of interest for the next 3 years, 5 years, 10 years, however long it may be, okay? And then lastly, the index annuities. So we have two great product solutions at American National. First of which is our Strategy Index Annuity Plus. We have both a 7 and a 10-year contract. And what Gary alluded to a little bit earlier, our Rate Certainty Annuity, which comes in a 7, 10, and even a 20-year contract, okay? We're super excited about all of our product solutions, but particularly the index. So we'll go ahead and roll up our sleeves and do a little bit of a deeper dive now. So just first and foremost, the single premium immediate annuity, Palladium SPIA. This one I won't spend a great deal of time on because it's fairly simple in nature, but just so the agents in attendance have a basic understanding, it's available to your clients who are ages 0 to 90, okay? Minimum premium for non-qualified money, meaning money that's not in a tax-advantaged retirement account, is $15,000. For money that's in a qualified retirement account, like a 401k IRA, minimum is $3,500. We have several different payout options. So if you have clients who are looking for a stream of income for life or for a stream of income for a certain period of time, again, this is the product for them. Very simple, very, very cut and dry. Moving forward, our fixed annuity, so the multi-year guarantee, as I mentioned earlier, when you think fixed annuity, multi-year guarantee, you're thinking conservative clients who aren't interested in indexing. They just want a set rate for a set period of time. And at American National, we're proud to offer 7 guaranteed interest rate periods from 3 to 10 years. Okay, so if you have clients who just want to invest for a short period of time, they can go as short as 3 years. Or if you have clients who really want to go out further and get the higher interest rate, they can lock in the contract for as long as 10 years. Okay, also widely available to your the markets that you serve. So issue ages from 0 to age 90. We have minimum premiums, 5,000 across the board. So 5,000 FFS family, irrespective of whether it is qualified or non-qualified money. And that's very important because at American National, we are big believers on meeting clients where they are. So we don't set the bar so high with minimum premiums that makes annuity product solutions out of reach for most Americans. We believe that that's unfair. So at 5,000, you can market it more broadly into the communities that we all serve. Interest rate enhancement. So this particular annuity product solution has an interest rate enhancement for your clients who have more money to invest. So for example, if you have clients who are looking to contribute $100,000 to start their multi-year guarantee annuity, we will give them 0.1% or 10 basis points on top of the interest rate that they're earning. So very simply put, 4.5% becomes 4.6%. Okay. If you have clients who have very large sums of money that they'd like to invest in a multi-year guarantee annuity, say $250,000 and above, we will give a bonus of 25 basis points, which is 0.25%. So again, 5% interest rate for clients becomes 5.25 when you factor in that interest rate enhancement. So very attractive, great for the clients who are more so conservative minded, and you can really snag a lot of business away from the traditional bank channel, from clients who are putting money in CDs, because our interest rates are just as competitive and in many cases more competitive. And then of course you get the tax deferral of an annuity. So very compelling stuff. Lastly, waiver of surrender charges. So we all know that life happens and unexpected circumstances tend to occur when, of course, we least expect them. So God forbid anything were to happen to your clients, whether they're confined to a nursing home or terminally ill or rendered totally disabled, they can cancel their annuity or surrender their annuity with American National without any surrender charges. Surrender charges meaning the penalties that the company assesses. Okay, quick little chart here. So very important. We've touched on it indirectly, but I feel like we have to go after the banks directly because so many people feel like the money is safe at a bank because of that FDIC insurance. They feel like they're doing well at a bank, and that may be the case, or may have been the case, but now with interest rates starting to trend a little bit lower, that's not necessarily the case any longer. So this chart shows the spread between fixed annuity rates and bank CD rates. Okay, the fixed annuity rates are in blue, the bank CD rates are in green, the lower line. Okay, as you can see, the spread between the two, beginning at the end of last year, is starting to widen. Okay, bank interest rates offered on CD products are not keeping up with the fixed deferred annuities that we offer at American National. So again, very simple conversation starter. If you ask your clients who are oriented toward buying CDs, how are your interest rates doing? How's your money growing at the bank? And if they tell you, well, I'm only earning 2.5%, I'm only earning 3%, tell them I can give you 5% and it's tax deferred. Say nothing more. You've already started a great conversation and won over new clients. Fixed rate deferred annuity sales trend. So as you can see, These last couple of years have been gangbusters. 2022 and 2023 specifically, because interest rates have been higher than they had been in recent years, because Federal Reserve, our central bank, had kept them artificially low. But this chart shows a very, very important opportunity for each and every one of you in attendance today, and each and every one of you who is a part of the FFS family. And that is, if you look here, beginning in the early 20-teens, so 2010, 2011, 2012, and on and on and on, the industry was selling on average about $30 to $40 billion a year in fixed deferred annuities, okay? Some of those annuities were locked in for short periods of time, so say 3 years, 4 years, 3 years, 5 years, so on, so on. And then some of those annuities were locked in for longer periods of time, okay? Say 8, 9, or 10 years. The important point is those annuities have either long since matured, are about to mature, or have just matured, okay? So you want to reach out to each and every person that you know at church or any civic organizations that you're a part of, and ask them, do you invest in annuities? Okay, you'll be surprised how many clients you come across who do invest in annuities, but they invested in them at a time when rates were lower. Well, good news, rates are higher, but we don't know for how long they're going to continue to be higher. So it's a great opportunity for you to win new clients and have them consider a new fixed deferred annuity at a higher rate. Lock in the rates now while they're still attractive. Okay, and in this final little blurb here, the state of fixed annuities. So 2021, just to give a high level overview of the last couple of years, 2021, 55% of fixed annuity premium went into 3-year contracts. 30% went into 5-year contracts, okay? So those 3-year contracts, as I alluded to in the previous slide, they're maturing this year, if they haven't already. The 5-year contracts are maturing in 2026, okay? It'll be here before we know it, okay? That's all opportunity for you to win over new clients and help them transition from potentially a lower interest rate to a more attractive interest rate moving forward. Okay, and then just something a little bit fun, because we always want to make sure that the sales process is enjoyable, not only for the agents, but also for the agent's clients. So anytime that we show a fixed annuity kitchen table presentation style, we want to make sure that we do it in style. And that acronym STYLE, the S stands for safety. So in a fixed annuity, you get safety, your client gets safety. There are no stock market fluctuations. It's not tied to any index. Principal and interest are guaranteed by the carrier. And again, as Gary alluded to earlier, we've been in business now for 119 years. A-rated across the board, stellar reputation. We're not going anywhere. We've been with FFS from the beginning. Looking forward to working with you all for many, many more years to come. The T in style stands for tax deferral. So remember, key selling point to your client. All the interest earned is tax deferred. As long as there are no withdrawals, there's no 1099. Can't overstate this enough. Tax deferral. Because unlike with the 1-year CD you get at the bank, with a fixed deferred annuity, or any annuity for that matter, your client is not getting a 1099 at the end of each year. So the money that they're not paying Uncle Sam, Uncle Scam as I like to call him, and the money that they're not paying the state in income tax stays in the contract, stays earning interest. Very important. The Y stands for yield. So very, very attractive interest rates. We have several rates now that are at and above 5%, especially for your clients who have larger sums of money to invest, plus those bonus rate options, 10 basis points at 100,000 plus, and 25 basis points at 250,000 plus. The L stands for liquidity. So your clients, may withdraw up to 10% of their account value or annuity value beginning in the second contract year, or the interest beginning in the first year, without any sort of surrender charge. So no company penalty. And then, of course, the E stands for estate planning. All the proceeds are paid to the beneficiary in the event that the contract owner passes away. Very, very important, because you avoid the costs and delays of probate court. Okay. Now, moving forward to the index annuity product solutions. So again, very, very exciting stuff. We have the double dip, and I'm looking a little bit ahead, FFS family, but we have the double dip sales incentive, and then we also have the new product that Gary spoke of briefly during the introduction. But just to get started, in the index annuity portfolio, we have first and foremost our strategy index annuity plus 7 and 10 year contracts. So index annuity, very simply put, it's the cousin to the IUL. So everything that you know and love about IUL, but wrapped up in an annuity. Gains without losses, compound gains, not rebound when the market's down. Okay, all those wonderful things that we know and love about indexing. And then, of course, 2 contract lengths. You have the 7-year contract and the 10-year contract. It's available to your clients between the ages of 0 and 80. Widely marketable, widely available. So we can start with as little as $5,000 for your clients who have money in 401ks, IRAs, that sort of thing, and then $10,000 in non-qualified money. Okay. You also have the waiver of surrender charges for confinement, disability, and terminal illness. Okay, and then a couple of unique features with the strategy index annuity plus is that the client's interest that they're credited is tied to the performance of the index that they allocate their monies to. So we have S&P 500, we have the Mark 5 low volatility index. We are one of the only, if not the only, carrier on FFS's annuity shelf that allows your clients to access the NASDAQ 100 in their index annuity. And then we also have our Patriot Technology Index, which is proprietary. It's unique to us. We'll come to that here in a moment. But also want to highlight another unique option. So remember, Anico Strategy Index Annuity Plus, it's our indexed annuity, it's our accumulation product, but it's also our income product. So if you have clients who are looking for guaranteed lifetime income, they can add one of 2 lifetime income riders at issue, and that's entirely at their discretion. Plus, but wait, there's more, as the saying goes, plus, if your clients opt for the 10-year contract, they will receive a 1% premium bonus on all of the premium dollars that are added into that contract within the first 7 years. So the initial principal plus any additional premium that's added in the first 7 years. So it's also our bonus annuity as well. Okay, and then just a quick little refresher, because it's always good to see, but interest crediting and how it works. So remember, if the index that we have money allocated to, or our clients have monies allocated to, increases in the 1 year point-to-point period, then our clients get a certain amount of interest that's credited in their account as well. If the index decreases or is flat, is 0, then of course 0 is our hero, just like with IUL. Okay, and then always remember our point-to-point time frame or time horizon is always 1 year at American National. So everything's on a 1 year point-to-point basis. Okay, I briefly touched on this a few moments ago, but our proprietary index on the indexed annuity, the strategy indexed annuity plus, Patriot Technology Index, we are super excited about it. We unveiled it this summer in July, and it has been a top seller across the company. Okay, I'd like everyone to jot this down if you're taking notes. But this special index strategy is only available on the 10-year contract. So remember, we have a 7 and we have a 10-year contract, but the Patriot Technology Index only available on the 10-year contract. And regardless of where you go in insurance world, regardless of where you go in the financial universe, you will not find this Patriot Technology Index. So it is unique to American National Insurance Company. Now, those of you might be asking, well, how does this particular index work? What is it made up of? How does my client earn interest? Well, all very good questions. So, for example, this particular strategy is a 1-year point-to-point uncapped strategy. Okay? Simply put, the insurance company, American National, does not put any ceiling on what your client can earn. So it is uncapped. Okay? The participation rate is currently 125%. So, just to give an example, if this index returns 10% in a 1-year point-to-point period, the participation rate's at 125%. So, if it returns 10%, we give your client 125% of 10%, which is 12.5. Okay? Uncapped, 125% participation rate. Now, what is the index made up of? Very simply put, it is made up of roughly 150 to 160 companies that are engaged in what our Department of Defense has identified as 14 technological industries that are central to our nation's economic growth and security and our nation's national security. Okay? What are these industries that these companies are engaged in? Well, everything from the new high-tech computer chips, okay, artificial intelligence chips, to biotechnology, the new medications that are helping us live longer and live better, space technology, wireless technology that allows us to have a meeting this intimate even though we're worlds apart from each other. Okay, all of the companies that are literally at the cutting edge of technology are part of this index. But more importantly, these companies are engaged in these various industries that our country has said America cannot afford to lose it. Okay, so all that being said, the government's pouring in money into these industries. They're ensuring that we have the technological capability to always be at the forefront of development. And that's something that's very important, very powerful. Imagine if you shared this story of this index with clients that you might know who are retired law enforcement officials, law enforcement officers, or soon to be. Same thing for the military. Don't you think they love to hear a story like this one? That they're investing indirectly in the companies that are keeping us at the top of the global economy and also keeping us safe in an ever-changing, sometimes scary world. Very powerful story to share, and one that I believe you'll be able to use to get a lot of traction in the field. Now, we talked about income strategies a little bit earlier, so this annuity product, both the 7 and 10-year contracts, allow for clients to add a lifetime income rider at the time of issuance. At the time of issuance, and clients have two choices. So they have a fixed rate lifetime income rider and a fixed plus index credit lifetime income rider. The fixed rate lifetime income rider is currently at 9%, and the fixed rate plus index credit is currently at 4.2% plus whatever the index strategies return. Okay? I know everyone here in the audience today is familiar with the rule of 72, so we're going to take the fixed lifetime income rider rate of 9%, and if you have a client who's looking to start their indexed annuity with 100,000, we're using a nice big round number, but if you have clients who are looking to start with 100,000 at 9% fixed rate for the lifetime income rider, they literally double their income base in their annuity in 8 short years. Very powerful story, especially when you're meeting with clients who are close to retirement or just retired, and they have a 401k with 6 figures plus, and they're looking to protect their hard-earned money and also make sure that they have income forever that they'll never be able to outlive. That's what the lifetime income rider offers them. Okay, bringing back style, if everyone will indulge me. So, indexed annuity kitchen table presentation. The S stands for stock market. So our clients get stock market style returns without any of the downside risk. And that's across all the strategies, S&P, NASDAQ 100, and even that compelling Patriot Technology Index. We get to participate in the games, but when the indexes are negative or they're zero, we're protected. We never lose a penny of principal. We never lose a penny of the interest that we earned in previous years. Zero is always our hero. The T, tax deferral. So again, very compelling because our clients aren't paying taxes every year. They're deferring those into the future, and the money that they would have paid in taxes stays in the contract and continues to earn compounding interest. The Y stands for yield. So the crediting strategies can have very attractive rates of return. You all briefly witnessed that with the Patriot Technology Index, uncapped, 125% participation. You cannot beat that anywhere in the marketplace. L, for liquidity. Surrender-free withdrawals, 10% are interest. So again, we realize life happens. If clients need to access a little bit of their money, they can do so without having to pay any of the contract penalties. And then finally, E, for estate planning. So just like a life insurance policy, annuities of all kinds have beneficiaries attached to them, and those beneficiaries receive the annuity death benefit. No probate court, no issues with the estate. Very simple, very cut and dry. Okay, and then for the young and young at heart, we'll bring the kitchen table presentation a little bit further. So let's play a quick game of tic-tac-toe and why indexed annuities are such a compelling option for your clients. So if you have clients who are CD oriented, they'll tell you, well, I like CDs because of the safety. We all know we walk into the bank, you see that gold placard at the bank teller desk that reads FDIC insured up to $250,000. But the problem is the interest rates are low, okay? And they're going to be getting lower and lower because it appears as though our central bank, the Federal Reserve, is committed to slowly lowering interest rates, resuming next year, 2025. Now, flip side of the coin, you turn on the TV, you turn it over to the financial news networks, and there's always some talking head, talking pundit on the screen who's touting stocks and mutual funds. And they will tell you very simply that stocks and mutual funds are the place to be because they offer a very juicy, very high return. But we all know the problem with investing directly in stocks and mutual funds is that you have all of the downside risk. Now, if we don't want the CD because we don't want the low interest, but we do want the safety that's associated with the CD, and we don't want the stocks and mutual funds because of the inherent risk, but we do like those higher stock market style returns, well, indexed annuity is the happy medium, tic-tac-toe. Something very fun, very cute you can show your clients when you're showing them these innovative product solutions. Okay, and then without further ado, as Gary again mentioned in the introduction, fantastic finish. FFS always starts the year strong with Level Up and ends the year strong with fantastic finish annuity contest this year, 2024. So for each and every one of you who writes a anico strategy indexed annuity 10, okay, so the annuity solution that we just spoke of, not the 7-year contract, but the 10-year contract, if it pays out by December 31st of this year, we will give you an additional 50 basis points, or 0.5% for the entire duration of the contest. Okay? So I trust each and every one of you at one time or another has reached out to Gary and asked, well, what does American National offer its hardworking agents for writing its innovative product solutions? Now, I trust, and I don't want to speak for him, but I trust that Gary will let each and every one of you know that when it comes to commissions in general for our product solutions, we rank among the top, if not the top, for commissions paid out to the field. And with this contest, you get an additional 0.5% for writing the business and having it issue and pay by December 31st, end of the year. Okay? Talk about a great way to end 2024 and start 2025. Okay? All right. So, last but certainly not least, one item that I should say we're super excited about at American National is our new fixed indexed annuity we call rate certainty annuity. And as I mentioned earlier, we're offering it in a 7, 10, and 20-year contract. Okay? So, for those of you who have a little bit of experience in writing annuities in general, particularly fixed indexed annuities, we all know that the renewal experience can be a little bit challenging. Okay? So we sell a client an annuity in 2023, and then next year in 2024, at the end of that 1-year period, the client gets a letter and he or she finds out that their renewal cap rates or renewal participation rates in their indexed annuity have changed. Then comes the dreaded annual review or dreaded phone call from the client, and the client wants to know what happened. Okay? So we ask ourselves at American National, could there be a better way for agents where we could deliver simplicity to the client? Okay? So this new product solution is very easy to understand. High performance potential, so clients can do exceedingly well, all with one index, and that's the S&P 500. So you have that powerful name recognition that goes along with it, but with zero renewal risk. Okay? Hence, rate certainty annuity. So, rate certainty annuity is based on one index and one index alone. We call it our S&P Dynamic Intraday TCA Index. Very simply put, it is an index that trades in options on futures, okay? But it's been designed by literally the top minds in the world of finance as a rules-based system to continually rebalance based on what's happening in the market, based on what's happening in the news on a global macroeconomic or geopolitical level, and make sure that our client's money wins the majority of the time. Okay? That's the key takeaway with this index. It's designed by the top minds, it's designed to run on its own, and it's designed for our clients to win as often and as frequently as possible. S&P Dynamic Intraday TCA Index. Okay, so how does it work? FFS family, these are the rates for the product, 7-year, 10-year, 20-year contract. If the contract were to be issued this month in December. So as I mentioned earlier, one index strategy, the S&P Dynamic Intraday, and there are four, within that, four distinct strategies. So number one, you have a declared rate strategy. Okay, it's just like the fixed rate in an IUL. Client has a locked in rate for a set period of time, whether it's 7 years, 10 years, or 20 years. Okay. If the client chooses the middle strategy, or what we call the 1-year performance trigger strategy, okay, I want everyone to look right here in the middle under the 10-year column, and you'll see trigger rate for the 1-year performance strategy is 7.70%. The floor is 0, and the trigger threshold is 0. The way that it works, if the index, the S&P Dynamic Intraday Index, is unchanged in a 1-year period, so if the index returns 0, your clients receive 7.7%. I'll repeat that once more. If your clients receive 0, or excuse me, if the index returns 0 in that 1-year period, your client receives 7.7%. Now, I ask, where in the financial world can you find a product where if the underlying index returns 0, your client gets 7.7%? Nowhere. Nowhere in the market can you find something that powerful, that compelling. 0 gets you 7.7. Okay? If you have clients who are looking to do something a little bit more conservative, we have a 1-year, what we call protected trigger. Okay? That's this second one right here. If you look under the 10-year column as well, you'll see there's a trigger rate of 5.7%. There's a floor of 2%. And there's a trigger threshold of 0. So, as long as the index returns 0 or more than 0 in a given year, your client gets 5.7%. 0 gets you 5.7%. If the index is negative, and this is the cool part about this particular strategy, if the index is negative in a given 1 year, your client gets 2%. Okay? Where does a negative rate of return get your client 2%? Nowhere. Okay? Rate certainty annuity, and again, if your client were to purchase this from you this month in December, regardless of the contract length they opt for, 7-year, 10-year, or 20-year, these rates are locked in for the entire contract, 7-year, 10-year, or 20-year. No renewal rate risk, no dreaded calls from the client, no dreaded letter from the carrier. Everything's locked in for the entire contract. Now, the power of this index. So, whenever I present it in person to our FFS family, I always have everyone look at the chart and from the get-go say out loud, this chart will make me wealthy. This chart will make me a millionaire. This chart will help me protect my clients' money and allow them to earn a very attractive rate of interest. Okay? because we had our friends at S&P do an 18-year look back on this S&P 500 dynamic intraday index. And as you can see right here, okay, the S&P 500 is in the lighter shade of orange, and the dynamic intraday index is in the darker shade of orange, okay? Every place where you see the darker shade, the darker shaded bar rather, positive, so it's at least 0 or higher. If your client had money allocated to the performance trigger, they would receive 7.7%. So 2006, 7.7%. 2007, even though it's barely up, 7.7%. Same thing for 2009, 10, 11, 12, 13, 14, 16, 17, 19, 20, 21, 23, 24. 7.7% for all of those years. Now, in the few years where the index was negative, 08, 15, 18, and 2022, if your clients had at least some money allocated to the protected performance trigger, they would have earned 2% in 2008 when the market was negative. They would have earned 2% in 15 when the market was negative. Same in 18, same in 2022. So if you look at this annuity closely and you manage your risk and put, say, a portion of the money in the protected performance trigger and a portion of the money in the performance trigger, you literally have a situation where a negative number gets you 2%, okay? So 2% is your hero. And then on the performance trigger, as long as the index is unchanged, 0 in a 1-year point-to-point period, your client gets 7.7%. So 0 is really your new superhero. Not just your hero, but your superhero. Okay. And last but not least, I know we've shared a lot of wonderful and valuable information with each and every one of you, and I appreciate you taking the time. I appreciate Gary taking his valuable time, and Maria as well, and for her always coordinating these great webinars for us. But my ask of each and every one of you is to really, in this final push at the end of 2024, to roll up your sleeves and familiarize yourselves with what we have to offer. So if you want to read up on the basic product specifications, if you want to view some videos on how to do basic illustrations on our annuities, we strongly recommend that you access our agent portal. It's lad.americannational.com. You can access it through the FFS back office. Familiarize yourself. If you have new recruits to the business, okay, they can access some of this basic information without even being appointed and contracted with us yet. So again, very, very important. Start that process, because we all know the best time to plant a tree was yesterday. Next best time is today. Okay, great. My other ask of all the attendees here today, every month, because we reset the rates at the beginning of each month, make it a habit. Make it a habit to look up our rates and see what our products can literally do to change your clients' lives. Okay? And then there is a little bit of American National specific annuity suitability training. So if you haven't already done it, you can access it in your portal, Agent Resources, Agent Required Training, and if you go to your learning plan, you can complete it. It's very simple. It's our all annuity encompassing training, PowerPoint style setup. It'll take you about 10 minutes to go through it all, but you do need to complete it before you can start writing annuities with us. And then of course you always want to make sure with your upline and with your home office in Georgia, that you're up to date on your anti-money laundering, you're up to date on your continuing education, including best interest training for annuities sales, so that way you can really go out into the community and start helping people, start changing lives, and also change the lives of your own family. Okay? And then, of course, last but not least, we always want to make sure that our FFS family knows we are always committed to helping you along this journey. You're never alone. You're in business for yourselves, but not by yourself. So if you have agents and teams that you're building on the West Coast, my colleague James Tadeo is there to serve you. He covers all of the states colored in orange. For those of you who are building and have teams and agents on the East Coast, my colleague James Yu is there to help you as well. And then, of course, if you're in the best part of the country, the middle of the country, I may be a little bit biased because I'm based here in Texas myself, and so is our corporate headquarters. But if you're in any of the states that are colored in in green for money, in green, you're welcome to call me. I would love to get together with you, help you run any kind of scenarios, illustrations. We can discuss sales ideas for various clients, and really just help you be the best FFS entrepreneur and business owner that you can be. So my contact information is right here. Please do not hesitate to call me. I always live by the motto, when you're working, I'm working. So I'm always at your service. But thank you all again for taking the time out of your days. Much appreciated. I know you all are busy. Thank you again to Gary and Maria. And I believe we might have a little bit of time left, so I'd like to open it up for questions if we have any questions from the audience.